Hello and welcome. So we're gonna check out the current price action that has happened now recently for Bitcoin. And this is basically what we are looking for as a high probability scenario. This is on a daily time frame in Bitcoin. And you can see here that we are moving in 3 waves. So here we have 1, 2, 3, which is a correction in Elliott waves. But here we are moving up in a 3 wave as well. So you can see that we could force like 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, but then we kind of overlap here with keeping going, because we could kind of like that 1, 2, 1, 2, 1, 2, 1, 2, and so on. But this 1, 2 is bigger than this, and that's not really preferable. So it has a higher probability of being a zigzag, like an A, B, C, or a W, X, Y. And here we also see that if we just count it without any Elliott wave knowledge, we see that it is 1, 2, 3. Because here it's much easier. Well, here is also a W, X, Y, but you can see here it's more like 1, 2, 3, 4, 5-ish kind of move if you just check it with your naked eye. So you can't really fit a 5 wave good here. So based on that, it kind of the probabilities for it to be a diagonal is higher, and it will be even higher if we keep going in 3 wavy kind of movements. So if we analyze the price action with this in mind, we have a couple of different scenarios. So basically we have scenario here where we analyze this as a ABC to a W, and then a wave X, and then we have a wave Y, making it a double zigzag. This is the invalidation for deep double zigzag. It's not an invalidation per se, it's just lowers the probability. So if we hit this, the probability for it to be another zigzag to the downside lowers significantly. That is one scenario. We also have this W, X, and then A, B, C. So W here, X, and then Y needs to be either a flat or a triangle in a sideways correction. It can't be a zigzag. So here we are looking basically for an impulse down in wave C. And then we have this scenario where we are looking at a finished WXY. And here you can see that we have a zigzag. Wave X is a triangle, and then we have an expanded flat. So A, B, C. And that is perfectly fine in a sideways scenario. So a sideways correction. So here we are basically looking for higher prices, and I haven't really gotten around to marking this. So this is a 1, 2, and we are looking for way higher prices here. And this is the smaller 1, 2s. So basically we're stacking 1, 2. So it's 1, 2, 1, 2, 1, 2, 1, 2, because we can't really count a 1, 2, 3, 4 here because of the overlap. So we have, well, not really overlap, but if we count it like here, 1, 2, 3, 4, 5. If this is wave 1, we need to have wave 2 here, and this hit the 61.8 fib, so the wave 4 target. So this isn't really the highest probability scenario yet, but this is still evolving. So we haven't really seen if this is the highest probability. So basically we're looking for now the retracement here. So if this is 3 wavy, we can expect some continuation upwards. But if this is impulse, we can start to look at these kind of scenarios, W, X, Y, with a finishing wave C here, or wave Y as a double zigzag. So yeah, that is basically scenarios, because if we count this as, let's see here, if we count it as a finished wave C here, and we are looking for basically bear market, we need to start the bear market either with a diagonal or an impulse, and this doesn't count well as a diagonal at all. It doesn't fit the rules because of the contracting lines and whatnot. But let's not go into details about that. So if we focus on a classic impulse, you can see that here we have a wave 1. We have to count this as wave 1 because you can't really count it as like 1, 2, 3 because a wave 1 need to be a 5-wave move. So here is the wave 1. And if we put wave 2 over here, you can see that the wave 3 needs to be an impulse itself. So then we need to have a lower degree, 1, 2, and then we need to have a 3 here and a 4 here. But you can see that 4 overlaps here with the price action of 1, which isn't allowed in Elliott waves. So we can't have a 4 here. So then we basically need to have wave 2 somewhere over here. But that doesn't fit well at all, because if you look at the time here, if you take the time here to 1, you can see that wave 2 will then be like 2000 Fib time longer than wave 1, which is, I mean, it's not probable at all. So yeah, it doesn't look good for the bullish alternative, basically. So that the possibilities for all this correction is that we will take this high sooner or later. And I don't mean in a year's time either. We're not looking for a longer bear market here. This will happen according to the probabilities. But yeah, there is more nitty-gritty here where we are basically in this count. So if this keeps going as an impulse, it basically invalidates the other scenarios, and especially if we hit this at 11,970-ish price, then we know we're not really looking for a double zigzag and deep correction, at least. So keep an eye on the retracement here in the current price action. If this is 3-wavy, we look for high prices. If this is an impulsive wave, we look for the bearish alternatives. But the bearish alternatives is still bullish in the long run. So yeah, that was pretty much it. Thank you for listening. Have a good one.